Summer weather, I hope. It's really starting to get beautiful around here, which is nice. Hey, Dave. Hi, Lydia. Dean. Hank, good to see you. Gerard, hello.
Wow, nice little room here for the Monday.
Hey, it's
What's up? What are
Monday
you
and
doing?
people are ready to make money, man.
I know. I love it. Uh, Nate, have you seen the markets this morning? I know when I checked around 5 a.m., it was down. We were down almost 2%. Um, Look at this, guys, at the open. I mean, yeah, I'll share screen for one second.
We're ripping. I mean, this market has been so resilient. It's insane.
It's funny. It's the opposite of what we saw so much over the last few months, where we'd finally get a gap. I'm sorry, this is gonna really mess up your guys' view. We'd finally get a gap open higher, during March and April. What is going on? I'm gonna stop sharing because that was messed up. All right. It's the opposite of what we would see back in March and April, where we'd finally get it open higher and it would
Right.
immediately fade.
Right.
Now, if we're looking at the SPY, if I can get this to reset, let me get the camera out of here. Big move lower over the weekend and bam, right out of the gates. Look at Newton on the 5 minutes. Right out of the gate. Pre-market, yellow, red, 5 minute candle right here. 9:35. We're green and rolling. Only
Yep.
down a third of a percent right now. So I
It's
love it.
crazy. It's crazy. And I love seeing SPY over 592. My weekend option folks will know that's a good number for us. But yeah, I mean, it's crazy how resilient this is. I think I saw it the last time any downgrade news came. We were down like 5.5 to 6% on the SPY in 2011. I think was what I saw. So the fact that we're basically break even right now is pretty crazy,
Did anyone see Bitcoin last night?
dude. That was crazy. I didn't actually know what happened. It reacted positively at first. It was risk off at first and
I
went
know.
up to 106.
I know. Almost, I mean, you got within 3% of all-time highs. Look at this, guys. This was last night. Bam. And then it sold off, which was a bummer. I posted in Telegram. I was super pumped right about here. I'm like, I don't know if coin will show. Let's look at coin. Yeah, coin was going to be up huge.
Yeah.
Everything was going to be up huge with crypto related. But for whatever reason, sold off. But we're still getting that. Look at that. Newton flipping back positive here on the 5 minute too at the open. So we'll see what happens. But just shows you what Bitcoin's capable of right now in this market. I mean, that's a 3% move overnight. And then obviously a fade, but just it's still a volatile asset, but it's got a lot of potential ahead, in my opinion. Especially if we get a break above the highs, it's going to start running, and it's going to start running fast.
I
So
still like all time highs in May personally
yeah,
for Bitcoin.
well, we almost had it last night.
Yeah, we were starting to get close. I mean, just little more melt up action. I don't actually know what caused the sell. I don't know if anyone in the chat knows what caused the rip back down because it was obviously post downgrade news that it was still ripping, so it wasn't really affecting it. And then something kind of later in the overnight hit it and caused that rip back down. But now it's what 104. Let me see. I didn't even look.
103 on the futures, probably about 102.50 on the
Yeah,
spot, 102.90 or 900.
yeah.
Carol, yes, that was a 5 minute chart. Yes. Oh, we saw Skylink
Yeah,
National.
so we got Apple pulling. Apple's taking a little bit of the beating right now. Mag's down closer to 1%. The last couple of times we've seen uh, the Mag 7 take a little bit deeper hit, while the SPY and kind of the rest of the broad market holds up. We've seen the SPY win. We've seen the follow through come back. Buy and get back into the Mag 7 and the market finish green. So hoping to see that again. Mag 7 basically need to be negative 0.5% right now for the entire market to be green. So be interested to see if we get that. Like I said, Apple really been one of the trickier stocks. I mean, I still like Apple. I'm still stacking on Apple, holding it for the long term and optimistic that over the long term, it's arguably the most reliable stock out there. But since December, it's been basically the most challenging stock because it's had some pretty deep corrections. So much China and tariff news sensitivity around Apple, but I still consider that one of the ones that is an opportunity to be a buyer and be aggressive on. And yes, you'll have to be patient because it's going to be sensitive to the news for the foreseeable future. But I like Apple, and then as you know, Meta took a little bit of a hit. Was that Thursday or Friday that Meta?
That was Friday. It took a hit. We had the perfect income trade on it, and Nate, we were up 80% all week long. Friday, the stock tanks out of nowhere. All of a sudden, we're down, but it came back and still finished above our profit line, so that worked out good. But yeah, that was a bit of a scare on Meta.
Yeah, but it was Thursday that it took the bigger because Friday ended up actually finishing okay, like around break even. Thursday
It did.
it opened 60. So Meta, another one that I like.
Yeah.
I think some of these pullbacks. Oh wow, it's already back up, basically break even today too after opening down in the 630 range. So anyway,
We
we'll so go ahead, Garen.
Oh, sorry. I was gonna say T-Mobile is looking nice off of our. We did a trade on that in the opening playbook. Well, I don't remember what day, but we had some people in the chat worried about it on Thursday, Friday. It's up 60% now. So I was talking about Oklo being up 100% overnight, and people were frustrated that T-Mobile was down 30%. Well, now we're up 48% on
There you
that trade. So
go.
hopefully you guys stuck with it, hung in there.
Yep. And then I don't know about you guys. I had a whole bunch of our income machine plays expire because we actually ended up having 4 or 5 stacked up for the May 16 expiration. I had like 3 different XLU trades expire for a full profit, and XLC expire for a full profit, and XLP expire for a full profit. So that was awesome to see the income machine cranking out some wins there. Speaking of which, let me start out with that. Let me give you a free income machine play to get us rolling on this Monday. Here it is. We're going to trade XLF today. If you want to jump in and join the party, uh, Income Machine has been on a tear. And folks, we are really close. Someone emailed me Friday. We are so close to getting the rest of the data piece data on this. It was amazing how much extra work you would think, piping in CBOE data and refining it and all of that would be, a process. But once you had the data good to go, well, turns out there's a lot to get that data baked in and doing all of the logic on the actual option chains in real time, not just to show data, but to actually parse it out, dig through the option chains, and find the trades you want. So it's been a labor of love for me the last little while on the income machine, but I'm super pumped up about it. And today, I'm gonna keep firing off and hope to keep the winning streak rolling. So this is XLF. It's not a perfect income machine play. By perfect, I mean it's not a 5 out of 5. It's a 3 out of 5. As you can see, our ranking here, but still set up pretty well. And so here's the trade for you. It's a 50-51 debit spread here for May 30. So that gives about 11 days for XLF just to kind of hang in there and not go down 1%. I'll post this one in the chat for everyone if you want to take a look at this one. Basically, if XLF can stay flat or not come down more than 1% over the next 11 days, this is going to crank out a 28% ROI. And that's really the kind of trades that the income machine is designed to make, to put you in position where you're not requiring the stock to do a whole lot, and yet you can make some pretty juicy ROIs. If you guys are familiar with income trading, especially like the old school credit spreads and stuff, which is nothing against them, by the way, but they're normally very defensive trades where you want to get below the price, which is also what we want to do with the income machine. We want to get below price and give ourselves cushion. But often they're returning like 5% or 6%. And here, what we want to do is we want to get 18%, 20%, 30%. And the way the income machine will work, actually, it's going to give you the option to go, kind of aggressive, moderate, or safe. And it's actually going to dig through the option chain and find you the best one for whichever one you want to go with. But in general, we want to get a bigger reward for that kind of safe trade versus 5%. Because the problem with 5% income trades is, you have to win 95% of the time if you want to, be consistent. And that's just really tough to do because even if you're trading safe, defensive type trades, we know the market's so volatile that at some point along the way, you're probably going to get blown out of that trade. Whereas if you just are able to get 25, 30%, then you can lose 1 out of 4 trades, which you shouldn't. You should, maybe win or lose 1 out of 7 or 8 trades, but you can lose more and still be net profitable. And so for me, that's kind of how I look at some of these dynamics and systems is number one, I want to have a big cushion where the opportunity is in my favor. And number two, I want to be able to lose a reasonable amount of the time and still be profitable because we all know that losing is going to be part of the game. So That's my spiel on income machine there. Like I said, XLF, we want it to stay, I should say, above 51 there. Stay above 51 there, and we will get ourselves about a 28% return. I pulled this at the open. I know, I think XLF popped a little bit since then. So maybe it's 79 cents, maybe it's 80 cents, but something there in general. All right. A couple reminders, as I always try to give here, for all my members. Make sure you know you can email me directly. My email is in your members area, so you can shoot any emails. If you guys have been winning on some of these automated options or overnight options, or your 4 for 4 on weekend options, it's always good to know and kind of get a little bit of a members track record going. Obviously, I know my own account and what I'm doing, but always great to hear from you directly. Here's what's going on in my account. Here's what I've done. So I'm always happy to hear that, and also, if you have questions or concerns, those as well. And then the other two things are to make sure you're in my Telegram and make sure you're on the daily text list, just to make sure you're getting, my stock of the day every day and any important updates there as well. So what we want to do today, I'm going to get a little meat and potatoes on you today and walk through, because one of the big questions I get is basically, how do I actually use options? Because I throw around terms like, twisting options or hijacking options, or kind of taking advantage of the line in the sand, like different stuff like that I'll throw around. And I know that a lot of people don't fully understand what that means, what the advantage of that is. So I want to break that down a little bit today, and get into that training. Graham, before I jump into that, anything else on your list to cover here?
Uh, Nothing. No, I'm excited for you to get going. The only thing I was going to add to it, the just random stock talk, is that GE and HWM, which have been our darlings over the last year, like 2024, we traded them all the time. And man, I missed this run up recently on GE and HWM. I wish I was in on it, but let's go ahead and add those to our watch list. Look for a good buying opportunity there. But Nate, yeah, take it ahead or take it away.
All right, cool. So let me grab that real quick for you. Someone asked about the text list. That is right here. This is the stock of the day. You just put your phone number in that form, and that's where you get my stock of the day, just texted directly to you. Obviously, nothing, you don't have to pay for anything or do anything. It's just sent to you each day directly to your cell phone number, right there on that form. All right, cool. So let's dive in. We're going to get into some training today. I also have a little special for you as well, but I'm going to kick off. So you're going to often hear me say things like twist options or hijack options, because I think that regular options are almost impossible to trade consistently in today's world. Now, the reason I think that is for all the reasons that Graham and I often talk about: the implied volatility, the expected move, how good you have to get the timing. And there's other reasons too, like how, a lot of the best stocks out there have very expensive options, which doesn't just make it hard for regular traders. It also makes it hard for trade management to scale your account. Think about it. If you have a $10,000 account and you're trading a $1,500 option, well, even if you do well and you want to start scaling, well, now you have to go from $1,500 to $3,000 if you want to move up, because just moving up from one contract to two contracts is going to drastically change your risk. Whereas if you have, slimmed down risk for $80 or $100 or $200, now you can easily manage your account and scale it up. So on today's opening playbook, I want to give you a deeper dive into twisting options using my flagship strategy, automated options, as an example. So I'm going to use my automated options strategy as an example today to kind of build how we do this. And so if you've wondered, when I talk about strategies like this, what am I doing behind the scenes? That's what we're going to dive into today. I'm going to get crafty here with the pen on the screen and draw some things out, take your questions, all that good stuff, because I really want you to understand how to do this. At the end, I'm also going to open up the 2-for-1 special on automated options for one day only today. So if you want to jump into the current trade, you can do that today. I'm going to do one more day on that 2-for-1, which I had never done on automated options before, but I'm going to give folks one more day to do that as well if you stick around to the end. But first, let's dive into the strategy. So the goal of automated options is to place one trade a week and generate about a 50% ROI automatically within 14 days. So if you want to know what the actual trade structure is, we place one trade over the next 14 days. We want to get a move, and we want to capture right around 50% within 14 days. For me, I put about 2,500 bucks in per trade, so about 1,250 bucks a week. So if you put 2 grand in, 1,000 bucks a week is pretty much your target here on automated options. Now the cool thing is I do this without even knowing when to exit. Okay, so I don't even know when I'm going to exit the trade when I set it up. And even more importantly, without having to predict what the market is going to do or where a stock is ultimately going to finish. So again, you hear me say things like this. I don't want to predict where the market's going to finish. I don't want to have to get my timing exactly right, and I still want to make money. Well, how do I do that? Strategies like this. Instead, we're looking to hijack any bullish move over the 14-day period that we're in the trade, whether we're watching the charts or not, and automatically exit for around 50% ROI. Okay, so that's the goal. Over 14 days, if we get any move in our direction, we want to get out automatically, even if we're not paying attention to the charts. Sometimes that move comes early and we're holding the trade for just a couple of days. Like this was in March, okay? So this one was a 4-day trade. The move came early. You can see right here. Hopefully you can see. We were down on day 1, but it popped on day 3 and 4, and we got out of that trade in 4 days, even though the trade was 14-day window. Here, we use basically the whole window. Why? Well, we got a teeny pop here. It wasn't enough to get out. Then we were basically down, going sideways / down for 10 straight days, but we got a little pop at the end. That was enough. We made money on that one. 13 days. Okay, so 2 very drastically different examples, but both very common with the way we trade the strategy. Regardless, all we need is a big enough move in our favor at any point during the trade window, and our broker is going to automatically cash us out with a win, as long as we're going to move at some point during that window. And in my opinion, this is the single biggest advantage in all of trading, period, bar none. My hope for you guys is that if you learn nothing else from me, that you learn how to trade this way, where you flip the odds in your favor relative to regular options. And instead of chasing moves all the time and trying to get timing and trying to predict where the market's going to finish, you understand how to use, unpredictable markets to your advantage. So let's break it down. Here is a just basic chart that you'll see. Could be any stock, any time frame. And frankly, this is what most charts look like, right? A lot of sideways moves, some pops up, some pops down along the way. And traders really struggle to make money with this kind of price action. Again, very typical chart. Lots of sideways, couple moves up during the course of 10 or 12 days, couple moves down. They might enter here, right? And then 5 days later on an option, they're down 50%. And they say, oh, okay, we're losing. And then they get out, they miss the pop. They might even enter here, right before, get the timing right, and then just hold on to the trade a little too long. Oh, look, we're getting going. I want to make more money. Pops back down, and now they're losing money all over again. And while this chop kills most traders, it's actually a hidden gold mine for automated options. The way that I trade, it turns into a hidden gold mine. And that's really what we want to take advantage of, because all we need is a relatively small jump in price, just like this, okay, small move, to hit a really nice win on automated options. And we set it so that our broker cashes us out automatically whenever we get this move, right? So we're not trying to time it. We're not watching our charts. We're not saying, 5 days of sideways movement, we better get out. We're not doing any predictive analysis. We're just saying, listen, at any point, if we get that move, we're going to get cashed out with a profit, like we did in mid-April, 11.11 on that one. Or the week after on April 17th, hit 12.50 on that one. That's 50% ROI for me, 2,500 bucks, 12.50. Or the week after, April 25th, another 12.50. Or the week after on May 2nd. How many of you guys got the May 2nd one? That was one of those ones where it grinded sideways and then finally pulled up at the end. Or how many of you got 10 days ago on May 9th? Just over the weekend, ripped up, 11.76. So, just these last 5-6 trades, 11.11, 12.50, 12.50, 10.71, 11.76, you could have really stacked up your account. Notice that we didn't have to get the timing right or predict where the market was going to finish on a single one of those trades, as long as we got the move somewhere during the trade. Some of those examples, it was 2 days in, some it was 4 days in, some it was 8 days in, some it was 12 days in. It does not matter as long as we get that move at some point. Now, I've been publishing real-time alerts on automated options with real money. I've been trading these with real money since April. So basically going on 13 months of live trades. Now the market has been pretty chaotic since April. So this is April of 2024 here. Hopefully I'm zoomed in enough that you guys can see. This is April of 2024 here. This is today's open here. Pretty chaotic markets as you guys can tell. And I think most traders have probably struggled in these kind of chaotic markets. I mean, maybe I'm wrong. You guys can let me know in the chat if you've loved these markets. But most people I've talked to have had some really nice runs, and then they've had some really ugly moments in between where they've taken a lot of hits. Now, in that time, 5K without compounding, just every trade over the last 13 months that we triggered would have been up about $17,800 over this back and forth market. Okay, 5,000 in the S&P would have turned into $5,833 over that same time frame. So you would have made $833, 5K into 5,800, or on automated options, 5,000 would have turned into 22,854. I don't know about you, but I prefer automated options. Same market, same time frame. And all we're doing to change the same market that would have given you about $800 and turned into 22 grand is twisting options so that we don't have to nail timing and direction to pull money out of the market. That's really all we're doing, is we're twisting the options around to give us a bigger advantage. Okay, so how does it actually work? What are we actually doing in this market to take advantage of it? And here's what I'm going to kind of draw on the chart or draw on the screen here and hopefully give you guys a good understanding, or at least a basic understanding. Obviously, if you want to join automated options and really get deep, we can do that. But I want to give you a basic understanding of how this works in real markets. And it all starts, of course, by using a debit spread that requires a directional move within the time frame. So what does that actually look like? Well, like I always try to show you guys, we're going to have a market moving and we're going to have a line in the sand, right? So the market is moving. It can move in either direction. And let's say that we're entering the market right here. So the market's here. What are we going to do? Well, we're going to put on a debit spread, which means we're going to sell a call up here and we're going to buy a call down here. And this is what a debit spread looks like. Two options that give us a line in the sand. Now, what most people do is they require the market to finish above one of these levels, right? So they have to predict that when the market runs out of time, so let's say that your market, this is your expiration date, right? That's when your time's up. It has to finish. That the market needs to be above their level when the market finishes. Now, to me, I find that very difficult. It's not impossible, and I'm trying to do more and more with the income machine when I have the odds enough in my favor. But in general, on a 2-week trade, to me, predicting where the market's going to finish is a bit more of a gamble versus the way that I like to trade it is anything can happen here. The market can start down, it can start up, it can start sideways. But as long as I get a big move, and actually not even that big of a move, normally about a 1% move. So on average, about a 1% move above this level, I'm going to cash out and take my money. Okay, so think about it. That can happen on day 2. That can happen on day 3, day 6, day 8, day 10, day 12, day 14. It doesn't matter. And anything can happen in between. The market can go down. The market can turn sideways. It can do anything in between. And as long as we get that move anywhere when that trade is open, we are going to get out with a win. Okay, so what that means, let me set it up for you again. We have our line in the sand. That's where we sell. Okay, and then we have the call right below. That's our debit spread. Buy the one, you sell the other. You have what I call the line in the sand, where price needs to be above in order for you to hit a win. So my question for everyone here is this. Again, every option has an expiration. Here, let me make this a little fatter so you can see it. Every option has an expiration, right? So you have an end point in the trade. Let's say that our endpoint here is May 30. Okay. So let me do some chat trivia. Let's say the market is right here. So we're trading the market right at 592. That means this level is 593. We're trading it right above price. Okay? 593 becomes the level that we need price to move above over the next 2 weeks or 11 days. So let me ask the chat a question. How many of you guys think that the market is going to finish above 593 on May 30th? Give me a yes in the chat if you think it's going to finish above 593. So somewhere in here, maybe somewhere in here, somewhere in here. Fair amount of yeses. Fair amount of yeses. Okay. How many of you think that it's going to finish below 593 on May 30th? So, we're pumped up, overextended. A lot of you saying 50-50, somewhere in between. Okay. How many think below 593 in the next 11 days? You think we're going to have some centering back out correction? Okay. Couple more. Anyone else think it's below? Yep. Okay. So kind of have a spray chart for my illustration here. But let me ask a question. How many of you think that at some point in the next 11 days, whether we go down or up, that at some point in the next 14 days, whether it's here or it goes down first and then it's here, or it goes up straight here, that we're going to get a move above 593, say 1%, say hits 595, 596 at some point in the next 14 days. That's somewhere between here. In other words, we don't need the dot to finish down here. It can finish anywhere. It could literally hit any of these numbers at some point over the next 14 days. Okay? That's my beautiful spray chart that you can see. The odds of that happening are quite good. A little, right around 75%. That the odds are going to happen. And if you can hit 75% and have an average win of 50%, you're going to do really, really well. So that's really what we're trying to take advantage of in a nutshell, is that we don't care when it makes the move. We're going to preset up our trade with the conditions. Then I'm going to inject some extra probability into that using my model and try to get an even higher win rate by only entering trades when the odds are even higher that we're going to get some fall through momentum. So this is the entire idea. Okay, so how do you do this? Well, again, if you guys want to join automated options, I'll give you the entire super deep dive along with every trade. We'll talk about that in a second. But in general, you can do this in other ways. How are you going to do it? Well, you're going to set up a debit spread. You can do it with the credit spread, but I like a debit spread. So debit spread is the trade structure. Why? Because that gives you that line in the sand. You can set it up in all kinds of different conditions, above price, below price, wherever you want, right? What you're going to do next when you're choosing a debit spread is choose time. Okay, so time is your next question. How much time are you going to give it? Does anyone know? Let me just ask the chat. I like doing the pop quizzes just to see if you guys have started picking my brain yet. Does anyone know, since the more time you give it, the higher probability it's going to make that move, right? Why I use 14 days. So in automated options, I use 14 days. Does anyone know why? I could use 14 months, and the odds of it making a move at some point during, the beginning to the end of that trade become a lot higher at 14 months than they do at 14 days. I could use 14 weeks, something in between, but I use 14 days. And the reason I do that is because I'm getting a couple questions, but no one's quite hit it yet. The reason I do that is because of Mike's got it. The trade-off of the capital. It's all about the trade-off. What do I mean by that? Well, if I'm going to put 2,500 bucks into each trade and I'm going to give it 14 weeks instead of 2 weeks, now I could have 10 or 12 or 14 trades open at the same time. Now all of a sudden I have 30 grand on the line. My odds have gone up, but I have $30,000 on the line. Well, by nature, I now have to reduce my risk size relative to my capital to have that many trades open. And so as a result, for having 10 trades open, I have to use less size on every trade because I only have so much money in my account. And now my average win might be higher, but because it's spread out, it's less impactful. At the same time, I could do it on a shorter time frame, but my win rate's going to go down. So 14 days, what I found, is the sweet spot for rotating my capital, recycling my capital enough while still getting really good odds of winning the trade. That 14-day lets me repeat it enough times where I don't have to have all my capital laid out, but I still have a high enough win rate that I'm going to take advantage of. That's my time frame using automated options, 14 days. So I'm going to say 14 days, but folks, you can do this. The cool thing about the strategy is you could do this on any time frame. You could do this on a short term. You could do this on a long term. I have a completely different strategy. You guys have probably heard me talk about stacking trades, investing 2.0. That's meant as more of a portfolio strategy. And I give it more time and I do a little bit safer trade because that increases my odds. And I want to roll over a smaller size per trade. But automated options is meant to be aggressive as far as income strategies go, going for about 50%, but also recycling those profits quickly enough that I'm going to be able to stack an account. Okay, so 14 days is a very purposeful window that gives me great risk to reward, but also lets me recycle my money fast enough. Okay, so you're going to have a debit spread, you're going to have a time, you're going to have a line in the sand. The line in the sand is what's telling you how aggressive you want to be. Okay, so Graham often teaches the wrap order. The wrap order is right in the middle. That's basically saying I need it to go higher, but hardly higher at all. It's wrapped right around the current price. It could go up 0.2%, and it's going to be enough to get me a win. Most income strategies would be more defensive. They would go below price. So Apple's trading at 240. You start at below price, at 230. And then as long as Apple stays above that level, you can make a few percent. Or you could do like something I would call a jump trade where you go super aggressive. You actually go fully above price where you need price to make a big move even to get you a chance of winning, right? So you have to choose how aggressive directionally. So the line in the sand is really your direction choice. That's how directional you want to be with your trade. And you can do it in a million different ways. On automated options, we combine this 14-day sweet spot with a combined sweet spot right above price. Why? Because we're trading the broad market. We know over 14 days, the broad market has a baked in pretty high probability of moving up around 1% over 14 days. Not always going to happen, but by going up above price, we get a much juicier risk to reward. This direction is going to define your risk to reward. The more aggressive you are, the better your risk to reward is. Remember, you can play safe, but if you play safe, you're only going to make 5, 8, 10%. Okay? If you want to play aggressive, you can make 100, 200, 300%. What I'm doing with automated options is I'm trying to bake in a perfect balance. 50% ROI, high win rate, recycle quickly. Okay? I'm trying to bake that all into a perfect sweet spot. That's why it's my flagship strategy. Okay, and then next, you're going to choose your target. Okay, so that's kind of the last thing that you're going to decide when you build this debit spread. So you build your debit spread, you need your time, you need your line, and then you need your target. For me, my target automated options is right around 50%. Like I said, this is based on testing, not my theory. Doing 14 days at the window just above price and a 50% target is just the perfect sweet spot for me. It's where I can recycle the opportunity to make, 1,000 or 1,250 bucks over and over and over again and have a chance at targeting that on repeat with high enough odds. Again, guys, just to be clear, you can make your odds higher. You can change these around. But what I want is that really juicy mix of good odds, but nice return. I don't want to make 5%. I want to make 50% or 48% or 46% over the next 14 days. Okay, so this is what you're doing. And the way that I do it is I give myself this 14-day window, just like this. Okay, price is going to be right around here when I set up my trade. I'm going to have a 14-day window for price to get up here at some point. Whether it gets up here now or goes sideways and then goes, or even goes down and then goes, or just turns sideways and goes late, doesn't matter as long as it gets from here to somewhere up here over the next 14 days. That's really the concept in a nutshell that we're trying to take advantage of with what I do in automated options. So my question for you is, when I show a chart like this, does this make sense to you now? That for most people, a spread when the market does this is a losing trade, but for us, it's a winning trade. Does this now make sense to you? Because to me, in my opinion, the ability to turn losing trades into winning trades is the single biggest advantage for any trader. Most traders are professionals at turning winning scenarios into losing scenarios. We want to turn losing scenarios into winning scenarios. All right, now let me just give you a couple examples from last summer. Okay, because we went on a beautiful run last summer. We're on a really great run right now as well, by the way. But I just kind of want to show you how different some of these charts look on this run. Okay, so this was April 26th through May 1st. This is, by the way, this is going back to last year. I just want to show you how different some of these look. Okay, so this was our entry. Most people don't like entering on a red day. I don't care as long as it hits our trigger. So we entered around here. Within 3 days, the market had moved up enough. We made money on this one. Again, that was last summer. April 26th through May 1st. Okay, the next trade was May 3rd. Started out ugly. We were actually down about 30%, but popped back up. Remember, our level that we needed was right around here. We popped enough above it, made money. This one took 1, 2, 3, 4, 5, 6, 7. That one took about 8 days. Okay. Next, we got just a little grind up. Love these ones. No stress whatsoever. Grinded up here and made us another 50%. That was the next trade, May 10th. Okay, so we started again April 26th. Then our next trade was May 3rd. Next trade, May 10th. Just grinded up. Next trade, May 17th. This one popped up. This one was a cool one because just these 2 days here of sitting above the price and a little bit of time decay that most people hate actually working in our advantage. Another 50% return on May 17th. Then May 24th, home run, hit immediately. That one actually gapped up and made over 50%. That was May 24th. Very different looking chart there. Here's one of my favorite ones. This one hit kind of like the one we did just last week. We had a ugly day one, back to break even, and then just one good day. Boom, that's all we needed. June 7th. All right. Then we get to June 14th. Okay, look at this one. Market went up enough where even though this bar was going down the entire time, because we moved up, it was still above our line in the sand, and this actually ended up giving us a winner on June 14th. June 21st. Totally different looking chart. Moved sideways. Still got us into a win June 21st. Then June 28th, that was an easy one. Market went straight up. Are you guys seeing how many different chart action we got over a 10 trade winning streak here? All of them resulting in the final end goal. And then this is my favorite one. This was July 5th, and this was a winning trade. This trade hit the target right here when we got a fall through. Everyone else, and my guess at least, everyone else, my guess, would have lost money on this kind of income trade. We got in around here. Our line in the sand was somewhere around here. 3 days without having any idea when to exit because our target was set. We cashed out. My assumption is everyone else trading would have lost money, But here we're getting a winner. And all we're doing is that mechanical trade that I just showed you, where we're setting up our time, our line in the sand, and we're looking for the market to go up at any point during the trade. At any point, we cash out, we make money. Even like this example, when the market eventually goes against us and everyone trying to predict the market gets it wrong, but we're able to make money. Okay, so I hope this is making sense. I got a lot of yeses in there, so thank you for all of you guys who said yes, yes, you get it, it makes sense. So notice how we went 10 for 10 without having any idea what price actually looked like. Okay, so I just flipped through these examples. Let me just go through real quick. On none of these examples was I saying, hey, I think tomorrow's going to be bullish, or the next day is going to be bullish, or I think that, 2 days from now it's going to finish higher. None of those trades have that. They're just saying over the next 2 weeks, I think we're going to get some point of follow through. And every single time we did. Now, obviously, I don't go 10 for 10 on every 10-week stretch. That was a great example from last summer. I just love that example because the charts look so different, and we hit targets on all 10 of them, even with very, very different looking charts. All right, so that brings me to today, which is great news. If you want to get into the current automated option trade right now, you can do it. We're going to open up the special. I'm going to give you a chance to get into automated options right now. We have our live trade open in the members area. That gives you the exact trade that you can get into right now if you want. And if you guys want to take advantage of that, let me quickly cover what else you get when you join automated options as we open up the 2-for-1 here one more time. We're going to do opening playbook special here one more time. So let me rip through this real quick. Thank you guys for the feedback. And if you want to join and get our current trade that's open right now, you can absolutely do that. It's in the members area. So first, you're going to get the 90-minute step-by-step workshop that shows you exactly how to target these payouts over and over and over again. It's an absolute deep dive. It's basically the same concept that I just covered, but with all of our specific rules around automated options, how it works from A to Z. That's in the members area right now. You can literally go straight from this presentation and watch that presentation. It includes full details from how to place your trade to how these automated options work so that you can start using this technique in your account literally today. In fact, there's a free, or not a free, but a trade in there right now for you. Now, you'll also learn the trick. Remember, I mentioned we only trade these when the market aligns. Well, we're going to show you that in the master class as well, so you can actually see the rules behind how it works. And that's what really took our win rate from 55%, if you kind of just close your eyes blindly, all the way up to over 70% on automated options. You'll immediately be able to start using this each and every week if you want to. And by the way, just a few clicks of the mouse. Guys, this is not a super complicated trade where then you have to set up alerts and manage it. We set up the trade, we set up our target, and we walk away from the computer, period. We don't even have to plan when to exit. That's all taken care of by the market action itself. Just like you could have done the last 6 weeks using automated options. And yes, any broker will work. We have folks using Schwab, E-Trade, Tasty Trade, Fidelity, Robinhood, Interactive Brokers, you name it. Any broker can do this, and a 401k or IRA should get the job done as well. These are all risk-defined trades. Now, if you want to see how powerful this actually is and how the setup works with real money, well, then Friday, we're going to do our next automated options live trade. So I'm going to go live on camera, targeting $1,250 like I do every week, as long as the trade triggers, which the odds are very good that it will. And we'll do that live this coming Friday. All members will be invited for that real money trading class. So you can follow along, watch over my shoulder, and essentially copy and paste this week's trade in a matter of minutes live on that class if you want. Now, I think automated options, I predicted this would be perfect timing, if you guys remember, about 2 months ago, because the volatility is just so good that in that 14-day window, we're getting those big moves so very often. That's why we've won 6 out of our last 6 trades. If you compounded that, any sense over the last 6 weeks, you'd be on, a pretty nice pile of cash right now. Not because I predicted exactly what those, 6 weeks would look like, but because we're getting those big moves. And so 1%, 2%, 3% moves are very normal right now in the market. As a matter of fact, I think the SPY's up about 1% intraday right now. I think it's about break even, but up about 1% intraday just today alone. Now, after going through 5 years of data on automated options, the cool thing about this is the average contract is about $50 to trade. So it's very small account friendly. Okay, which is what I love about it. You can scale it up, you can scale it down. You have total control, like I mentioned at the beginning of today's class. That's one of the unsung heroes of trading this way is capital management, which I think is incredibly important. We have not a seven, that's not right, not a 70.8, a 73% success rate on automated options. So the average win right around 50% ROI. We'll have a live, for those of you asking in the chat, we'll have a live trade this coming Friday, but there's a current trade right now, an active trade that you should open today if you join because it's open right now. And then our next, so kind of getting 2-for-1 special on the trades and the discount that we're going to offer today. You get both. You can go in to log into the members area and take today's trade. Then you'll also be able to join Friday. When I say today's trade, it's the one that we issued last Friday, but it's valid because it's the same price today as it was Friday. So it's perfect to go ahead and enter today as well. So you get that and Friday's live class. What do our current members have to say about automated options? Well, I think it's my number one fan favorite. Yuri said 1250 easy, bring on the next one. Anthony said 3 wins, 100% of my entries, exceeded targets on all 3. Craig said perfect. You see a lot of people do the 1250 trade, which is what I often do. Howard said 100% win rate, profit of 2,200. And I have literally hundreds more from automated options. It is kind of a fan favorite of mine from my OG members. And I know a whole bunch of you are in the chat. Thank you all for those of you who are in the chat saying that you've been on a roll as well lately. Now, if you take one of the limited memberships today, every single week, you're going to get my exact automated options income opportunity, one that I'm personally trading with my own money as well. That's up to 52 weekend opportunities every year, each one based on the same method that targets $1,250. Every weekend we get the trade, just over and over again, mechanical. And every alert, I break it down step by step like I do in all my trades. The ticker, when to place the trade, options criteria, entry, exit, it's all in there. Like I said, if you guys log in and see the current alert, you'll see how everything is spelled out in that alert for you. Each income alert has clear instructions on how to place the trade. I do all the heavy lifting, folks, because I'm trading these with my own money. So I just hand that over to you, and you can trade it if you want. You just read the alert and follow along, just like 10 days ago, May 9th. Anyone in the chat grab our May 9th automated option? That was one of my favorites. I sent that alert out on May 9th. At the end of the day, anyone could have clocked out for the weekend after taking that trade. And the next time, literally Monday, one day later, one market day later, you would have hit $1,176 on that trade. Now, that's not normal. We don't usually cash out in one day, but it sure is fun when it happens because, like I said, we don't care when the big move happens. It could happen 1 day in, 2 days in, 5 days in, 12 days in. We don't care as long as we get the move. In this case, 1 day later, you would have opened your brokerage account and thought, $1,176 richer. I don't mind that, without having any idea what was going on, what the headlines were, without waiting for an exit alert from me. None of that. You just would open your broker and seen it cashed out with more money. And don't feel like you need to be sitting next to your computer waiting for the entry. I post every trade right around